Earnings season is upon us. Dow Jones Industrial member UnitedHealth Group, ticker UNH, is always one of the first to go. Their Tuesday earnings release sent the stock soaring over 11%, reaching all-time highs before pulling back a bit on Thursday with the broader market. The earnings, however, were a bit average, even lackluster. So what sent the stock racing upwards? Well, today we're going to take a look at those earnings and see why UnitedHealth is back on track. Welcome to the Quality Investor. I've made quite a few videos in 2024 related to UnitedHealth, all linked below, mostly due to the endless negative news beating the stock downwards. But with this earnings, the stock finally turned positive year to date. While the news around UnitedHealth always seems negative, the fundamentals of the business remained unchanged. And I saw this as an opportunity. I added over $3,000 to my position in 2024 at an average cost of $497. It is an important adage in investing to tune out the noise. Short-term price fluctuates with news and sentiment. However, the market usually recognizes its folly, and the price eventually returns much closer to its intrinsic value. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. Sometimes the move to intrinsic value can take years, but in UnitedHealth's case, it took a few weeks. UnitedHealth finally started trending upwards about a month ago, gaining 15% in that time. And despite the pullback on Thursday, UNH is up 8% year to date and finally seems to have favor in the market again for its strong fundamentals. Plagued with challenges in Q1, the CEO, Andrew Whitty, made some key points on the earnings call and affirmed the outlook for 2024. This affirmation was the reason for the pop in share price the last couple of days. UnitedHealth was hit by a cyber attack in Q1 that affected the costs that even bled into Q2. UNH had to suspend some of its services, leading to a cost surge, as well as providing advance payments to providers, which affected the cash flow smoothing. UnitedHealth also divested its underperforming Brazilian business, along with reclassifying its South American business as held for sale. This has resulted in over an $8 billion one-time hit to the earnings. Long-term, however, this should expand margins, as the Brazilian business was operating at a loss for UnitedHealth Group. The revenues again grew for UnitedHealth Group to $98.9 billion for this quarter, up about 6.5% year over year. It says here led by Optum, and Optum really performed well, up almost 12% year over year. Optum has been a very strong business acquisition for UnitedHealth and is really leading the growth for this business. They're also getting back on track with their cash flows, $6.7 billion in cash flow from operations, which is 1.5 times the net income. But I think what really gave the investors confidence to push that share price higher in the market was this right here. The company affirmed adjusted net earnings outlook of $27.50 to $28 per share established at its November 2023 investor conference. They made that outlook prior to the cyber attack, and they even said the consistent outlook absorbs an estimated 60 to 70 cents per share of the business disruption impacts for the Change Healthcare services. So despite that cyber attack, UnitedHealth is performing as expected, maybe even a little better than expected so far in 2024. We do see that medical care ratio at 85.1%, which is almost 2% higher than it was from the prior year of 83.2%. However, on the call, they stated that the main reason for this is the South American divestitures, as well as some costs that were shifted into these 2 quarters from that cyber attack. UnitedHealth was forced to make some upfront payments to providers resulting from this attack in order to keep the business running smoothly. They even said on the call they should see this medical cost care ratio to even come down a little bit throughout the rest of the year. Year to date, their revenue is up 7.5%. And another point they made on the earnings call was regarding operating costs. You can see operating costs year to date are $27.2 billion versus $27.4 billion prior year. They gave some interesting reasons why this was the case. The CEO stated that the reason is partly due to AI efficiencies. Specifically, he said that existing processes were made more efficient by reducing steps, and that Optum Rx, their pharmacy arm, they spent 9% less in onboarding new clients which they also noted was at a record high. So UnitedHealth is seemingly able to find ways to apply AI to enable a more efficient business and reduce costs. And that's going to add ultimately to their free cash flow. And ultimately their free cash flow is back on track. They had $5.9 billion in free cash flow in Q2. And while still far behind last year's totals, a large reason of that is due to this net changes in operating assets and liabilities. Again, they had to really increase their working capital needs because of the disruption the cyber attack caused the business. They were very adamant on the earnings call that operations were smoothing out and expected to return to full normalcy for the rest of 2024. So now that UnitedHealth is back on track, their share price closed at Thursday at $564.34. What's interesting is their PE ratio now is 37.4, which seems very expensive. However, that's mostly due to the fact that their earnings so far this year has a lot of downward pressure, which is affecting that trailing 12 number. Once these quarters with the cyber attack and the business divestitures are out of the picture here, we should see a much more normalized earnings per share return back down to the mid-20s level. You can see their forward PE based on my projections is at 20.2, which is right where we expect it to be. After updating this quarter with their numbers, I have a valuation average for my bear case at $477.65. My base case is $568.82. And my bull case is at $686.33. My base case assumes about 6% year over year free cash flow growth for the next 10 years. And ultimately, the base case seems to show that they're priced right where their intrinsic value about is. Without any margin of safety, I have a buy price of $575.40. Of course, on the quality investor, we really stress a large margin of safety. And with UnitedHealth's very safe business, I do think a 10% margin of safety is appropriate, which is at $517.86 or an 18.6 forward PE. That obviously puts UnitedHealth right now far outside of buy range. Of course, we've seen some volatility in UnitedHealth in 2024, so another negative news event could bring that share price back down. Their return on invested capital is at 8.7%, which is a little bit lower than what we like to see around 15% and is below their 5 and 10 year average. However, I think there's been some downward pressure on that number due to the one-time costs they've incurred in the first 2 quarters of 2024. Ultimately, I view UnitedHealth as a very safe business. It's one of the favorite businesses of all the super investors, and I'm very happy that I increased my position while its share price was beaten down throughout 2024. And of course, it's one of those stocks that if it does come back down into my acceptable buy price, I always add more, but I'm very happy to see that it's back on track for 2024. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.